Hi everyone, so this is Manisha and welcome back to my YouTube channel. So in this video, we are going to solve one more long question and the question name is Snowdrop. Okay, and this is the second last question. Okay, so this is again from the cash flow statement. So if you have watched my previous video, you have a clarity regarding how to solve cash flow statement questions. Okay, so I think it's very easy area and I mean scoreable area. If you know to perform few sorts of calculation, you can easily score full marks in this topic. So let's solve this question together and be the champion by the end of this video in the solving the cash flow statement question. So the question is, the following information has been extracted from the draft financial statement of Snowdrop, a limited liability company, a statement of financial position as at 31st March. So they have provided a 2-year financial position. And you remember, if you remember, in all of the cash flow question, they will provide the 2-year financial position and one P&L or extract of the P&L. All right, and there will be some additional notes as well. So this is the non-current assets parts, current assets parts, and equity liabilities. Then okay, fine, and here is the additional information. The first additional information says the statement of profit or loss for the year ended 31st May 20x5 show the following. So this is the P&L extract portion, not the full P&L, but they are showing extract, and the year end is 31st May. That's fine. And the second note says during the dividend paid were during the year dividend paid were 270,000. See, sometimes they will provide the ready-made figure of dividend as in our case, but sometimes you need to calculate. If you remember the first question where we have calculated a dividend, yes, and how can we calculate? Using the opening and closing retained earning figure and the profit for the year figure. So we can calculate the dividend in this way. The next we have a profit before taxation has arrived at after charging 700,000 for depreciation on non-current assets. So they have also provided the ready-made figure for the depreciation. Again, we don't need to perform calculation for the depreciation one. So if you remember from the previous question that we have performed the calculation for the depreciation charge for the year, but in this question they have provided the ready-made figure. Okay, and the fourth point says during the year non-current asset with a carrying amount of 200,000 were sold for the 180,000. So again, they provide that the non-current asset was sold for the 200,000. I mean, whose carrying amount was 200,000, and they were sold for the 180,000. So complete the following cash flow statement for the year ended 31st May for the Snowdrop. That's fine. That's fine. See, the cash flow statement, the cash flow are divided into three categories: the cash flow from operating activities, cash flow from investing activities, and cash flow from financing activity. Right? But the cash flow from operating activities can be calculated in the two way, direct as well as indirect, if you remember. But if you look at all the past paper questions that we are solving right now, the majority of the questions were related to the indirect one, not the direct. But you guys should know how direct method works. Okay, but just have a concept of the direct method, but majority of question is based on the indirect one. All right, so now this is from the indirect one, and the first one is profit before tax or profit after tax. See, here we take profit before tax. Why? Because the below we will reduce the tax amount, so that's why we will not take profit after taxation. So you need to choose here. In exam you might be provided with a drop down box, or there will be option to choose. Please select profit before tax. Okay, and the profit before tax, it's just a ready-made figure that we need to pick up. It's 1032. Okay, and one more thing, they have taken 30 in the common. You need to confirm whether the question also require a 30 to take you the 30 in the common. Yes, they ask us to take the 30 in the common. So here it will be 1032, and it is, I will write down shortcut, but please in exam you need to write the full profit before tax. Sorry. Okay. Now, next is depreciation. The depreciation figure is provided ready-made. It's 700,000. So we will take 30 common and write down here 700. Now it will be add or subtract. See, while driving the profit for the year, we have subtracted a depreciation, and as it is non-cash item, so we need to add it back. Okay. Okay. Now loss on disposal of non-current asset. So if you remember the last point of additional information, they said non-current asset carrying amount were sold for 180,000. So that means 20,000 is lost, right? And this loss has been deducted while deriving the profit for the year. So now we need to add it back. So 20,000. So we will take 30 common. That means 20 will write down here, and again it will be added. Okay. Next is a movement in the inventories. Movement in the inventories, you need to go to the SOP, and you can see the inventory figure of the 2 years. So inventory has been increased by how much amount? 80. So that means we have purchased more stock, more goods. That's why it's remaining in the closing inventory. So that means purchasing of more stock means cash is going out. So cash is going out. So cash will go out means we need to subtract. So 80 will be subtracted here. Okay. So 80 will be subtracted here. 80 will be subtracted here. Now next, movement in the receivable. Again, go back to the same portion, same heading, and trade receivable is also increasing. So if trade receivable has been decreased, that means we have received money from the customer. Customer has paid their the amount they are owing, right? That means if it is increasing, that is it's a cash outflow. Okay, it's a cash outflow. So by how much amount is increasing? 70 plus 60, that's a 130. Okay, so by 130 it's increasing, and that means it's a cash outflow. Again we will subtract. Again we will do subtract. Why? Because it's increasing. It's increasing, so we will subtract here. Okay, so if it has been decreasing, that means it's inflow, and so customer has paid the amount, so that's the inflow. Okay, now we need to subtract, because here the cash is going out. It's receivable is increasing means cash is going out. We need to subtract. Now movement in the payables. So if you go to the payables here, so 450 and 365, right? 450 and 365. What is the difference? What is the difference? It's a 450 minus 365. So that gives me 85. So our payable is increasing means it's inflow. Payable increase means inflow. Payable increase means inflow. And if it is inflow, that means it will be added to the cash. It will be added to the cash. It will be added to the cash. But if it is decreasing, in that case, it means we are paying back to our suppliers, and the cash is decreasing, we will subtract. But here it is increasing, so we will add. Now income tax paid. Now for income tax paid, you need to consider few things. Like first, you need to check whether there is current liability. In the current liability portion, there is income tax book liability book or not. If it is not booked, in that case you can take this ready-made figure 180 from the P&L. But if there is income tax liability in the current liability section, in that case you need to perform the calculation using the ladder approach or the direct approach. So let's look to our current liability. Yeah, there is taxation amount. So here is the taxation. We will go to the laser option, taxation. So brought forward amount is, how much is the brought forward? So just a second. It's a credit and it's a debit. Okay, so how much is the brought forward amount? Brought forward amount is 145. Okay, and how much is the carry forward amount? Carry forward amount will be on the opposite side of the brought forward. So taxation is a liability. In the current liabilities, it's in the current liability, so it will be on the credit side, and the carry forward amount will be opposite of the brought forward. So it's a 450. Oh yeah, 180. Okay, right. Now we will add the tax for the year. Tax for year is, how much is the amount? It's 180 again. Now, what is the total? What is the total? $325. But if we will do total on the debit side, it's 180 only. So there is difference. Difference of how much? Difference of how much? It's 325 minus 180. So difference of 145. Difference is 145. So this is the amount we have paid to the tax authorities, right? So 145 will be deducted. Why? Because we have paid 145. So it will be subtracted once again. All right. Okay. So we got our cash flow from operating activity. Just add all this. You will have a cash flow from the operating activities. Okay. Now next. Let me add first. Just wait. It's 132. Depreciation will be added. So it's 700. Add 20. Then subtract 80. Subtract 130. And add 85. And subtract 145. So this give me 1482. So total is the 1482. I will write down here. It's a 1482. Okay, that's fine. Now, cash flow from investing activity. Purchase of non-current asset. So in order to calculate the purchase of non-current asset, again, we will make the laser right here. So non-current assets, and we will remove everything here. Yes. So now we will go to the non-current assets section. So here it is. So what is the amount? Brought forward amount. Brought forward amount is your 2700. See, now they didn't provide the breakdown of cost and the accumulated depreciation. So if you remember in the previous question, they have provided the breakdown of cost and the accumulated depreciation, but here they didn't. So you should know how to perform calculation if this kind of information has been provided. So 4600 is the carry forward amount, and it will be on the opposite side, right? And if you remember the notes, so they say the depreciation charge for the year is 700. And why I am taking here? Because these are the carrying amount. This 2700 and 4600 is the carrying amount, and so we need to charge depreciation in order to reduce carrying amount. One more thing, one asset has been disposed, right? So what is the carrying amount of those disposal assets? 200. All right. And is there revaluation surplus? No, there is no revaluation surplus. So let's find out the difference. So difference will be your purchase of the assets. Difference will be your purchase of the assets. Difference will be your purchase of the asset, and which is 2800. So we have purchased the asset of 2800, and as the cash is going out, it will be subtract. All right. Will be subtract, but the question they didn't say to choose add or subtract, because you can see there is no any box given. And now receipt from the sale of tangible non-current asset. It's very easy. It's given the question, that is 180. So we have received 180,000. Taking 30 common, it's 180. So 180 is cash inflow. So it will be add. Again, you don't need to choose add subtract because there is no box given. But still, I am writing here to make you clear, to clear your concept. Now, issue of share capital. Issue of share capital, you can go to the share capital and share premium one. Yes, you can see the total share capital and share premium brought forward was 2370 plus 150. Okay, so this gives us 2520, and currently we are having the total of 3800. So share capital and share premium has been increased by how much amount? By how much amount? It's 1280. So we have received 1280 by issuing the share. So that means cash inflow again. So here it will be 1280, and it will be again add. Now dividend paid. For dividend paid, they provide the ready-made figure in the question. That's a 270,000. So we are paying dividend. So cash outflow. So 270 will be subtract. Repayment of the long-term borrowing. See, this for share capital and the long-term borrowing, there is no any notes given. So that's why I am doing the ready-made calculation. I mean shortcut calculation by just figuring out how much amount the amount has been decreased or increased. Okay. So here 10% loan notes, it has been decreased. We have paid. So previously it was 100, now it's 0. That means we have paid our loan. So 100 money is out. So 100 will be subtracted. So here 100 will be subtracted. 100 will be subtracted. Right? Just okay. So let's add this minus 2800 and plus 180. This will give me 26. I will write down here minus 2620. And here we will have 1280 minus 270 minus 100. So this give me 910. Okay, 910 positive. So this will be positive 910. Okay, now add all these figure. The cash flow from operating activity was 1482 and the cash flow from the investing activity is negative 2620. So negative 2620. And again the cash flow from financing activity is positive 910. So 910. This will give me minus 280. So here you will write down 280 and also write down decrease. So also write down decrease. And now cash and cash equivalent at the beginning of the period. So you need to go to the SOP and here the cash bank is 170. Omni balance is 170. So you need to also check whether there is bank overdraft in the current liability or not. Okay. So there is no any bank overdraft. It's 0. So 170. 170. Here I will write in 170. 170. So now 170 will be added to this value. So 170, it will give me negative 58. So it will give me negative 58. Okay. So now this means 58 should be our overdraft item. 58 should be overdraft item because in the cash in bank it's 0 and you can see yes. Bank overdraft is 58. That means your calculation is correct. If you didn't get the 58, that means something is somewhere is wrong or you need to check it out, right? So that's why I'm saying the cash flow is very good area to score the marks and you can verify your answer immediately, right? So that's why please practice as much as possible question for the cash flow. And we are done with this question as well. I hope you have enjoyed and thank you so much guys for watching my video. Have a good day.